Take a moment to look at the room around you. Look at the smartphone resting in your hand. Look at the laptop on your desk. Look at the LED lights illuminating the space. You are looking at the peak of human engineering. You are looking at a digital miracle that allows us to transmit the entire sum of human knowledge across the planet at the speed of light. But almost no one realizes that this entire civilization is built upon a single foundation. It is not gold. It is not oil. It is not even copper. It is element 47 on the periodic table, silver. For 5,000 years, humanity treated silver as money. We coined it. We fought wars for it. We hoarded it in royal vaults. But in the last 100 years, silver underwent a silent transformation. It stopped being just a shiny metal used for jewelry and coins. It became the essential DNA of the technological age. Without silver, your smartphone would be a useless brick of plastic and glass. Without silver, the satellites orbiting our planet would fail. Without silver, the very hardware of the global financial system would cease to function. We have constructed our entire modern world on the back of this one specific metal. We have done so while assuming that it will always be cheap and it will always be available. But that assumption is about to be shattered by the cold reality of physics and geology. What I am about to show you is the story of the most undervalued asset in the history of mankind. This is not just about inflation or market cycles. This is about a physical supply cliff that the world is currently driving toward at full speed. We are consuming silver faster than we can pull it out of the crust of the earth. We are using it in ways that make it impossible to recover. While the public focuses on the price of Bitcoin or the stock market, the smartest players in the room are looking at the shrinking inventories of physical metal. They realize that we are entering a period where the demand for silver is becoming infinite while the supply is becoming finite. In this deep dive, we are going to strip away the daily noise of the financial media. We are not here to talk about what the price might be next week or next month. We are here to talk about the reality of the next decade. We will explore the chemistry that makes silver indispensable. We will look at the dying mines of Mexico and Peru. We will uncover the massive amounts of silver buried in our landfills. Most importantly, we will explain why the collapse of the global debt bubble is about to force a massive repricing of the only metal that is both industrial fuel and honest money. This is the story of the indispensable metal. This is the exposure of the supply cliff. Welcome to a masterclass on the future of global finance. To understand why silver is the most critical asset for the future, you must go back to the fundamental laws of science. There are 118 known elements in the universe, but only one of them holds the title of the best conductor of electricity on Earth. That element is silver. On a scale of 0 to 100, where copper is the standard at 100, silver ranks at 106. It is the gold standard of electron flow. This is not an opinion. This is not a market trend. This is a law of physics. Why does this matter so much today? Because we are currently in the middle of the largest electrification project in human history. Every time you touch a screen or start an electric engine, you are asking electrons to move from point A to point B. You want them to move fast. You want them to move with zero resistance. And most importantly, you want them to move without creating heat. Resistance creates heat, and heat destroys electronics. Silver has the lowest resistance of any stable metal at room temperature. Therefore, it is the most efficient carrier of energy in existence. In the past, when electronic components were large and bulky, we could afford to use copper. But today, we are living in the age of miniaturization. We are packing billions of transistors onto a microchip the size of a fingernail. At that microscopic scale, efficiency is everything. If you try to use copper, the chip will overheat and melt. If you use gold, it is both too expensive and not conductive enough to reach peak performance. You must use silver. You cannot negotiate with the periodic table. You cannot pass a law to make copper conduct better than silver. You cannot print a substitute for an atom. Silver is also the most reflective element known to man. If you polish a bar of silver, it reflects 95% of the visible light spectrum. This is why it was used in mirrors for centuries. But today we use this property for something far more important than vanity. We use it for energy. Every solar panel on Earth relies on silver paste to collect the energy of the sun. The silver creates a superhighway for the photons to be converted into usable electricity. Without silver, a solar panel is just a dark slab of glass that loses a massive amount of its power. Politicians and central bankers love to believe they can solve any problem by printing more currency. They think that if they create enough trillions of dollars, they can conjure a green energy revolution out of thin air. But you cannot print silver. You cannot print the physical properties of conductivity and reflectivity. As the world moves toward artificial intelligence and high-speed telecommunications, the demand for these specific physical traits is exploding. We are building a digital nervous system for the planet, and silver is the nerve tissue. While the printing presses are running at full speed, the supply of the most conductive material in the universe remains fixed by nature. This collision between infinite paper and finite physics is where the ultimate value of silver lies. We are currently witnessing a global tectonic shift in how humanity produces and consumes power. Governments from Washington to Beijing have committed to a future of net zero carbon emissions. This transition relies on two primary pillars: solar energy and electric vehicles. Both of these industries are acting as a massive black hole for the global silver supply. To understand the scale of this demand, we have to look at the sheer volume of metal required to replace fossil fuels. In the solar industry, silver is not just a component. It is the heart of the technology. Each solar cell uses a silver paste to move electrons. In the past decade, engineers tried to use less silver to save money. They called this thrifting, but they have hit a wall of physics. As we move toward more advanced cells like the TOPCon and heterojunction models, the amount of silver required actually increases. These new high-efficiency panels require 30 to 50% more silver than the older versions. Global solar installations are now reaching 500 gigawatts per year, and the industry is already consuming over 200 million ounces of silver annually. This represents 20% of the entire global mine production just for solar panels. Then we must look at the electric vehicle revolution. An internal combustion engine car uses about 20 grams of silver, mostly in the electrical systems. But a battery electric vehicle is a computer on wheels. It requires between 30 and 50 grams of silver for the heavy-duty battery management systems, the charging infrastructure, and the complex sensors required for autonomous driving. If the world reaches the goal of producing 50 million electric vehicles per year, that industry alone will demand another 80 million ounces of silver. The most critical factor here is what economists call inelastic demand. The green energy revolution is not a fashion trend. It is a government-mandated industrial overhaul. When a country like Germany or China builds a massive solar farm, they do not care if the price of silver goes from $25 to $50. The cost of silver in a solar panel is a small fraction of the total project cost, but the panel cannot function without it. They will pay any price to secure the metal because the alternative is failing to meet their energy targets and crashing their power grids. This creates a perfect storm. We have a massive wave of demand that is dictated by government policy and the laws of physics. This demand does not go down when the price goes up. Instead, it acts as a relentless vacuum, sucking silver out of the market and bolting it to rooftops and car frames where it will stay for decades. We are essentially taking the world's liquid supply of silver and sequestering it in industrial applications. The world is trying to go green, but it is forgetting that the green future is painted in silver. In a normal functioning economy, when the price of a commodity goes up, the producers make more of it. If the price of corn doubles, farmers will plant more corn in the next season. If the price of oil skyrockets, drilling companies will open new wells. This is the basic law of supply and demand. But the silver market is fundamentally broken because it does not follow this rule. To understand why, you have to understand a geological phenomenon known as the byproduct curse. Here is the startling reality of the silver market. Roughly 72% of all silver produced in the world is a byproduct of mining for other metals. This means that the vast majority of silver comes from mines that are actually looking for copper, lead, and zinc. Imagine a massive copper mine in the mountains of Chile. The company spends billions of dollars to extract copper because that is their primary business. As they process the copper ore, they find a small amount of silver mixed in. They sell that silver as a bonus to help cover their operating costs. Now, consider what happens if the price of silver triples. In a normal market, the miner would start digging faster. But this miner is a copper miner. If the global economy is slowing down and the demand for copper is weak, he will not increase production. He might even decrease it. It does not matter if silver is at $100 an ounce. If the copper price is low, he will not expand the mine just to get a few extra ounces of silver. This makes the silver supply almost completely inelastic. It does not respond to price signals from the silver market because the people producing the metal are not silver miners. This creates a dangerous vulnerability for the modern world. We are relying on the old industrial economy to provide the fuel for the new green economy. If we enter a global recession and the construction of buildings and bridges slows down, the demand for copper and zinc will drop. When those mines slow down, the supply of silver will drop precisely at the moment when the solar and electric vehicle industries need it the most. We are essentially trying to build the future of energy on the scraps of the past. The remaining 28% of supply comes from primary silver mines. These are the companies that actually go into the earth, specifically looking for silver. But these companies are a dying breed. It is becoming almost impossible to find high-grade, pure silver deposits. Most of the famous silver veins in history have been hollowed out. Today, these primary miners are struggling with rising costs and declining quality. Many of them are forced to mine gold or other metals just to stay profitable. There is no swing producer in the silver market. There is no Saudi Arabia of silver that can turn on a tap to flood the market with supply. The tap is not just closed. The tap is broken, and the plumbing is falling apart. The second major crisis facing the supply of silver is the physical exhaustion of the earth. Humanity has been mining silver for over 5,000 years. We have acted like a swarm of locusts across the surface of the planet. First, we took the silver that was sitting on the ground. Then we dug the silver that was 10 feet down. Then we built massive machines to reach the silver that was 1 mile deep. We have picked all the low-hanging fruit. Now we are left with the scraps, and the physics of extraction is turning against us. In the mining industry, the health of a mine is measured by its head grade. This is the amount of silver contained in every ton of rock that is pulled out of the ground. In the year 2005, the average grade for a primary silver mine was roughly 13 ounces per ton. That was a highly profitable business. But look at the data today. The average grade has collapsed to between 4 and 5 ounces per ton. Think about the energy requirement of that shift. To get the same amount of silver today, we have to dig up 3 times as much dirt. We have to use 3 times the explosives. We have to run 3 times the trucks. And we have to use 3 times the electricity and water to process the ore. This is the energy cliff. Mining is essentially an energy arbitrage. You burn fuel to extract value. When the quality of the ore drops by 60%, your costs do not just go up linearly, they explode. We are fighting a war of attrition against the crust of the earth, and the earth is winning. Every ounce of silver we produce today is harder to get than the ounce we produced yesterday. This is a one-way street. Ore grades do not go up, they only go down. Furthermore, we are facing a massive discovery void. There has not been a world-class primary silver discovery in over a decade. Exploration companies are spending hundreds of millions of dollars drilling holes in the ground, and they are coming up empty. The legendary deposits like the Comstock Lode in Nevada or the Potosi Mine in Bolivia are things of the past. Even if a massive new deposit were discovered today, it takes between 10 and 15 years to bring a mine into production. You have to conduct feasibility studies. You have to navigate environmental regulations. You have to build roads and power lines and processing plants. This means that the silver supply for the year 2030 is already locked in. We know exactly which mines will be operating, and we can see the math. The old mines are reaching the end of their lives and are being decommissioned due to exhaustion. The new mines coming online are smaller and lower grade. We are facing a supply cliff where the production of silver is set to decline while the demand from the solar and artificial intelligence industries is going vertical. The gap between what we need and what the earth can give us is widening every single day. There is a fundamental misunderstanding in the financial world that silver and gold are the same type of asset. People think they are both precious metals that sit in vaults forever, but this is a dangerous error. To understand the true scarcity of silver, you must understand the difference between a hoarded asset and a consumed asset. Vang is hoarded, silver is burned. Since the beginning of time, humans have mined roughly 6 billion ounces of gold. Because gold is so valuable, we almost never throw it away. Nearly 98% of all the gold ever mined is still above ground in some form. It is in jewelry boxes. It is in central bank vaults. Or it is in the bars stored under your bed. Gold is recycled endlessly. A gold coin from ancient Rome was likely melted down into a Spanish doubloon, and today it might be part of a wedding ring in New York. Gold accumulates over time. Now look at the forensic audit of silver. Humanity has mined roughly 60 billion ounces of silver throughout history. That is 10 times more than gold. Based on that math, you would expect there to be 60 billion ounces of silver sitting in warehouses. But the reality will shock you. Experts estimate that the total identifiable above-ground inventory of silver bullion is less than 5 billion ounces. Where did the other 55 billion ounces go? They did not evaporate, but they have effectively disappeared. For the last 100 years, we have treated silver like a disposable industrial commodity. In the 20th century, photography was the primary driver of silver consumption. Millions of ounces were used in film and X-rays and then flushed down the drain or thrown into the trash. Today, photography is gone, but it has been replaced by billions of electronic devices. Silver is used in such tiny amounts in your smartphone or your toaster that it is not economically viable to recycle it. When your phone dies, you do not take it to a precious metals refiner. You throw it in a drawer or it ends up in a landfill. This is the thermodynamics of waste. We are taking pure silver bars from the vault and turning them into vampire dust scattered across the planet. Unless the price of silver reaches $500 an ounce, it will never be profitable to dig up those landfills and recover that metal. This makes silver unique. It is the only precious metal that behaves like a fuel. Just like a barrel of oil is burned in an engine and gone forever, silver is consumed by industry and removed from the investment world. We have spent a century throwing away the family fortune, and now the vaults are starting to run dry. We are building a high-tech future on a shrinking supply of the very metal that makes it possible. The world is currently operating under a massive illusion. Most investors look at the paper price of silver on their screens and assume that the market is well supplied. They see millions of ounces traded every day in London and New York and believe there is plenty of metal to go around. But if you look behind the curtain at the physical warehouses, the story is terrifying. We are witnessing the fastest drain of physical silver in history. To understand the silver market, you have to monitor the two largest warehouses in the world, the COMEX in New York and the London Bullion Market Association, or LBMA. These are the vaults that back the entire global trading system. In early 2021, the COMEX held nearly 150 million ounces of registered silver. This is the silver that is actually available for delivery to buyers. Today, that number has collapsed into the 30 million ounce range. That is a decline of nearly 80% in just a few years. To put 30 million ounces into perspective, the global industry consumes that much silver in less than 10 days. We are scraping the bottom of the barrel. Why is this happening? Because the smart money has realized that the paper price is a lie. Industrial users and large private investors are buying silver contracts, standing for delivery, and moving the physical bars into private storage. They are taking the metal off the exchange because they know that in a world of infinite paper money, the only thing that matters is what you can actually hold in your hand. This is a linear and relentless trend. Every month, the inventory drops further, and mathematically, we are heading toward zero. When the registered inventory of an exchange hits zero, the paper market breaks. You cannot have a futures market if there is no physical metal to deliver to the person who bought the contract. When that moment of truth arrives, the market mechanism will fail, and the price will no longer be determined by bank algorithms. It will be determined by the desperate need of manufacturers who need the metal to keep their factories running. We are also seeing a massive shift of metal from the west to the east. While Western investors have been distracted by tech stocks and crypto, China and India have been importing record-breaking amounts of silver. China is no longer just a producer. They are a massive net importer. They are building a strategic stockpile because they understand that silver is the key to their dominance in solar energy and military hardware. The global float of silver is shrinking, and the metal is moving into strong hands that have no intention of selling. We are living hand to mouth, and the buffer that once protected the world from a shortage has been decimated. To truly appreciate the opportunity in silver today, you must look beyond the industrial demand and understand why this metal is currently in exile. For 5,000 years, silver was the primary currency of the world. In almost every language, the word for silver is synonymous with the word for money. Gold was the money of kings used for massive international settlements, but silver was the money of the people used for daily trade and the accumulation of family wealth. However, in the late 19th century, a massive political shift occurred that changed the course of history. In 1873, the United States Congress passed a law that effectively demonetized silver. Historians call this the crime of 1873. Before this act, anyone could bring silver to the government mint and have it turned into legal tender coins. This gave silver a fixed and powerful value in the economy. The bankers and politicians of the time wanted to consolidate their power. They realized that silver was too decentralized and too abundant for them to control. Gold was much easier to centralize in large bank vaults. By removing silver from the monetary system, they could control the supply of money more effectively. For the last 150 years, silver has been living in the wilderness. It lost its monetary premium and began to be priced based on its utility as a spoon or a decorative bowl. This historical suppression created a massive distortion in the market. We are currently living through an anomaly that has lasted for over a century. For thousands of years, the ratio of the price of gold to the price of silver was roughly 15 to 1. This reflected the actual geological scarcity of the two metals in the crust of the earth. But today, that ratio has stretched to levels like 80 to 1 or even 90 to 1. This means that silver is being priced as if it is 80 times more common than gold, which the geology proves is simply not true. As the global financial system begins to crack under the weight of record debt levels, the world is starting to remember what honest money looks like. We are entering an era of the great debasement where currencies are being printed into oblivion. When the public realizes that their paper savings are losing value, they will return to the assets that have survived every empire in history. Silver is the only asset that provides the same protection as gold, but at a price that the average worker can still afford. The monetary exile of silver is coming to an end. When the world demands honest money again, silver will not just be priced for its conductivity, it will be priced for its truth. The global financial system is currently trapped in a mathematical death spiral. We are at the end of a 40-year debt supercycle that has no historical precedent. The total global debt has now surpassed $330 trillion. To put that in perspective, that is more than 300% of the entire global gross domestic product. The United States alone is facing a national debt of over $36 trillion, and the interest payments on that debt are now exceeding the military budget. There are only two ways for a government to deal with debt of this magnitude. They can default on the debt, or they can inflate the currency. History shows us that governments always choose inflation. They will print as much money as necessary to pay back the debt with devalued currency. We are now entering the final stage of this process. When the public realizes that their paper currency is being systematically destroyed, they will search for a life raft. This is where the gold to silver ratio becomes the most important number in your portfolio. As we discussed earlier, the current gold to silver ratio is an extreme historical anomaly. In the crust of the earth, there are roughly 8 ounces of silver for every 1 ounce of gold. Historically, the price ratio was 15 to 1. Today, the ratio sits at a massive disconnect from reality. But when the debt bubble bursts and the flight to hard assets begins, this ratio will compress like a coiled spring. Let us look at the math of a potential repricing. If gold moves to $5,000 an ounce to account for the massive increase in the money supply, and the gold to silver ratio returns to its historical average of 15 to 1, the price of silver would hit $3 per ounce. Even if the ratio only returns to 30 to 1, the price would still be over $160. This is a 500% increase from current levels. This is not speculation. This is a reversion to the mean. Silver is currently the most undervalued asset on the planet relative to the amount of money in existence. When the panic starts, the silver market will experience a vertical move that will shock the world. Because the silver market is so small compared to the gold or stock markets, it does not take much capital to move the needle. When the masses realize they cannot afford a single ounce of gold, they will rush into the silver market. The door is very narrow and the crowd is very large. This is the recipe for a legendary short squeeze that will transfer wealth from the paper holders to the physical owners. We have traveled through the laboratories of physics. We have explored the dying minds of the Americas. We have looked into the digital heart of the future and searched the depths of our landfills. The evidence is overwhelming and the conclusion is inevitable. We are standing at the dawn of the Silver Age. Let us summarize the perfect storm that is currently gathering. First, we have the law of physics. Silver is the most conductive and reflective element in the universe. It is not an option. It is a requirement for the solar panels that will power our grid, the electric vehicles that will fill our streets, and the artificial intelligence chips that will define our century. This demand is exponential and it is inelastic. Second, we have the reality of geology. The earth is exhausted. The easy silver is gone. Ore grades are crashing, and the byproduct curse ensures that miners cannot simply turn on a tap to meet the rising demand. We are facing a supply cliff that has been decades in the making. Third, we have the consumption factor. Unlike gold, which is saved, silver is used and destroyed. We have thrown 55 billion ounces into the trash, and the vaults are now running on fumes. The buffer that once protected the market from a shortage is gone. Finally, we have the return of honest money. The global debt supercycle is reaching its mathematical limit. As the trust in paper currency evaporates, the world will return to the only assets that have no counterparty risk. Silver is the historical money of the people. It is the only hard asset that offers a massive upside from its industrial utility, while simultaneously acting as a life raft for your wealth. You are standing at a unique moment in human history. The gap between the paper price on a screen and the physical reality in the vault has never been wider. This is a massive arbitrage opportunity. When the world finally wakes up to the scarcity of this metal, the repricing will be violent and it will be permanent. The history books will look back at this time and wonder why silver was ever sold for $25 or $30 or $60 an ounce. They will see that it was the most mispriced asset of the 21st century. My advice to you is simple. Do not wait for the headlines. Do not wait for the central banks to tell you it is okay to buy. Become your own central bank today. Exchange your paper liabilities for a physical asset that the world cannot live without. Secure it. Hold it. And wait. The physics is on your side. The geology is on your side. And the math of the debt cycle is on your side. The era of cheap silver is over. The era of the Silver Age has begun. Make sure you are on the right side of history. Thank you for joining this masterclass. If you found this analysis valuable, subscribe to the channel and share this message. The truth is hidden in plain sight, but only for those who are willing to look.